Yes, boys, I believe this is the third video in the series and we are covering risk management. It is dead easy, boys. So what I'm going to talk you through is basically how to calculate your risk so you won't blow your account in one trade. So a lot of you are going to be starting with a £300 account, which is fine. But obviously, I think it's, let me work this out really quickly. So 10% of that is 30 quid. So 1% is £3. This is going to be quite hard to risk 1%. So I'm going to suggest on the lower accounts, you're going to have to risk a little bit more. But let's do now daft. Maybe risk 5% a trade. Maybe find a value you may be more comfortable with risking. Whatever model works for you, stick to it. So basically, what I'm going to talk you through is a pip in GBP is worth about 0.08p, which so 8p, 0.08 pounds. And that's for rough to pip. So what you're going to find is on a 100 pip stop loss, on a 0.01 lot, so I'm going to talk about lots as well, but on a 0.01 lot, so you're trading 1 ounce of gold, you're going to find that 100 pip movement is £8 because it is 10x. So, and then obviously your 0.02 is double that, so it's £16, and then 0.04 is double that again, so £32. You can see how it can add up and how chasing your losses is going to cause your account to blow. Boys, on say a 50 pip stop loss, you could double your stop loss or even just only take 50 pip stop losses if you want to be really, really careful. Obviously, boys, it's completely up to you how you manage your trades. It isn't down to us. How you manage your trades once that signal has been sent is down to you, which is why risk management is so important for you to get in your head. We will do weekly calls on risk management as it is one of those really important fundamentals that you have to know as a trader, even when doing your own signals. So boys, that is literally it on risk management. A few more little things is your lot sizes, what you should be doing on each account. So a £500 account, I'd risk max. At this point, you could maybe get away with risking so 10% is 50 quid. So I risk on a £500 account a 0.05 per trade, because you'll normally find on a 1-to-1, a 1-to-2 RR, you'll find that most of the time that you will make this back even if you take a loss. Furthermore, boys, with the sells, always set your stop losses, and with taking TPs, stuff like that, take your TPs, boys. If you've got a strategy where you're only aiming for TP1, TP2 with a signal, do not try and take TP5, or if your account size isn't big enough to chase, don't chase, if you know what I mean. So if you've got a £1,000 account, by all means put 0.1 of a lot on and let 0.02 run just to see how far it'll go. But if you're on a £300 account, you cannot afford to be letting runners go. You should only be putting on 0.01 at a push 0.02. It's all up to you, boys, on how you want to risk. But I've explained to you there exactly how much your risk is worth. You can calculate this a lot easier in the MT5 app, especially with the new update, adjusting your stop loss and TP. I will take you through that in a second, boys. But yeah, hopefully this video has been helpful on risk management. Any more info, and if you want to book a call or even just ask me when the next Zoom call is, we should do one weekly on risk management. Boys, drop me a message, and yeah, hopefully this helped. On to the fourth video of the series.